Lisa Schreiber is here, investment analyst at Gradient Investments, to give us her take on this market action. Sometimes when we see dips, people step in and they're buying, and we've seen that kind of action over the last several years. How are you feeling about the market now?
Yeah, just to begin with, we do not sell anything at the moment, right? There is a lot of uncertainties out there, tariff talks, maybe a retracting consumer, what we heard from Walmart yesterday. Then we have some rising geopolitical discussions flaring up again. So there are uncertainties out there and higher volatility. But when we actually zoom out a little bit and get a little bit higher level view here, then we still see U.S. economy is resilient and doing fine, right? GDP is growing right around 10-year average. Unemployment rate sits at historical lows. Inflation, while sticky and maybe some pressures ahead, is still coming down or fine. And then we have on the other side, on U.S. businesses side, earnings are expected to grow 14 to 15% this year. That might be overly optimistic, but even if we come down a little bit from that, that is still a positive backdrop that the market can perform well this year, despite some higher volatility and some higher uncertainty, and despite valuation. So we see still positives ahead.
Yes, understood. So earnings growth, I mean, it's true, 14 to 15% may be optimistic. I'm hearing a lot more folks saying, look, realistically, maybe it'll be 8 to 10%, and that can give a boost to markets, 8 to 10% overall. So would you agree with something like that you could see the 10% growth in the stock market? I mean, this week, the S&P is down 1.5%, the NASDAQ's down almost 2.5%. Do you think there could be 10% upside?
I would say 10% might be a little bit overly optimistic, but when we come in mid single digits to higher, then we can be positive after two awesome years, 2023, 2024, with plus 20% returns. Then I would say a mid single digit return with a little bit higher volatility down the road. I think it's overall positive, and we can be happy with that. Yes.
And on the high volatility action that you're expecting, and I would say a lot of folks agree with that. They expect volatility, a headline-driven market, for example, whether it's inflation or tariffs or something from Washington, geopolitical. Do you see those dips as buying opportunities, and then what do you buy?
Absolutely, Nicole. And I would say, generally speaking, in a market like this, we prefer quality. And you might hear that very often, but what we mean by that is we prefer quality, and we prefer the leaders in their respective sectors, in their respective industries, right, that can withstand such uncertainties ahead. And one of them is, for example, Netflix, right? That's the absolute leader in the streaming business. Peers like Disney and Paramount cannot even get near that, right? They just reported earnings, which again, another stellar earnings report. They actually reported the last time their new subscriber numbers, and that was a blowout report, right? Coming in double their consensus here. They are coming out with new content, right? They are coming out with streaming. They're setting foot in the live sports streaming with the football events, for example. The live football events were one of the most streamed sporting events ever. Now they announced they are streaming the Women's World Cup 2027 soccer games. So that is really great opportunities ahead, especially when we look at their great opportunity, which is already gaining traction in their ads business, right? That is really valuable there. And despite higher valuations at the moment, we still think that there is great opportunities for Netflix.
Right, higher valuations at the moment, and that's what I was going to ask about. But we are off the highs. You mentioned the last earnings report, the subscriber numbers, the stock gapped higher, and we saw this in late January. In fact, after that, it gapped higher, and then it moved to a new high of $1,064 and change. Now it's at about $1,000. What kind of upside do you hope for a name like this? 5%, 10% over what period of time?
So I think it's generally a long-term buying opportunity. Again, they're the leaders in their space. There's not really competition out there. So and also with the growth opportunities, especially in the live sporting events, I think long-term we can still expect low double-digit growth despite valuations at this moment. Yeah.
And then up next, we have DXCM, Dexcom. Tell me a little bit about this story. So this is a different picture on a chart, right? The Netflix stock was going up. It's up, 75% in 1 year. This one hit a high last March or April and has since pulled back. Tell me a little bit about why you think there's opportunity here.
Yes, sure. So under the hood, it's the same story, right? We prefer the leaders in their spaces, and Dexcom is the leaders in the diabetic, in the glucose monitoring space. It came out with positive numbers and with some hopes there after having some rough quarters last year, and with the stock, and you just mentioned it, pulling back over 40% in July last year, and it hasn't regained that since. There was a lot of issues around their sales team restructuring, which lead to less new customer ads. With their last earnings report, that all seemed resolved. Again, I think it's a great opportunity now as the stock hasn't gained back since, but they have great opportunities ahead. When we look at Stelo, for example, that just reported the full year numbers for that product being out, which immensely increases the total addressable market beyond just diabetic patients to patients who are more health conscious. They are still underpenetrated in the international market, which is gaining traction. They are now announced that they're building in AI to their product, which should give their patients a little bit more data points on the monitoring. So all of that is good news. And again, growth opportunities are great, and the stock hasn't regained since last year's sell-off. So I think that's a great opportunity to buy.
Yeah, and look, there's some of the competitors, Abbott Labs, Insulet Corp, but I saw at least somewhat recently it's been outperforming some of the peers. In the big picture here, do you feel that folks should be in their portfolios a little more cautious or optimistic, or have some sort of barbell approach?
So I would say, I would call it cautious optimism. We here at Gradient, we come up with the term bring an umbrella for 2025. That does not mean it has to rain, but it means you are prepared in case it does. And what I mean by that is focus more on quality, right? Maybe rebalance your portfolio back to your original risk levels after 2 such great years, right? Equities might have a higher weight for what you might feel comfortable with, right? So I would say cautious optimism, but still room ahead.
All right. Lisa, great to see you. Lisa Schreiber, investment analyst at Gradient Investments. Thank you, Lisa.